I got a lot of requests on my videos about business plans and to go in more depth when it comes to specific types of industries. Since trucking is the one that I know the most, or I should say I try to know the most about, I thought this would be a good one to start. Whether you're going to be an owner-operator, driving your own truck, or you're going to start your own trucking company and hire drivers, if you're going to obtain any kind of financing, you're going to need a business plan. Any bank that's even going to consider giving you money is going to require some sort of written plan. In this video, I'm going to go over the bare bones version of what you need to at least get consideration for your first loan. The examples I'm going to use are coming directly from me and my business plan that I used when we bought our first truck. These are the only sections that I included in my plan, and I'll go into depth on the detail you need for each section. The sections I'm going to go over in this video are going to be executive summary, the company description, market research, financials, including what assumptions you're going to make and what projections you're going to provide, a brief overview of the equipment, and finally your closing statement or your conclusion. I'm going to put timestamps on each one of the sections below so you can come back and check out other sections if you want, and because this video is going to be a little longer, that way you can skip around as you need to. So let's talk about the first part, which is the executive summary. Your executive summary is going to be your bare bones, boiled down framework of your business. You want to cover who's going to be involved, where you're going to operate, how you're going to operate, and what advantages you believe you bring to the space that'll set you apart from competition. You want to aim for about 1 to 2 paragraphs and don't go overly in depth with what you're going to already cover in the rest of the plan. The executive summary, you just want to give whoever is going to be reading your plan a brief overview, and that way they can skip all the parts that they're really not interested in. If you're going to be applying for a loan, they're probably going to skip right to the financial section. In my executive summary, I basically put that we were a small transportation company, where we were located. The purpose of our company is to provide truck services for a specific carrier. I stated in the beginning that we would only be working for Super Service, which was the carrier that we originally signed on for. We were going to be purchasing a single tractor and have it fitted specifically for that company. That truck would operate under the DOT numbers, the plates, the permitting, all of those things. I spoke to the strength of operating this way in the fact that we wouldn't have to find our own loads. They would be provided for us. All of our expenses, for the most part, would be taken out of settlement checks, so it would alleviate that upfront expenses and costs, and that would be the advantage of us starting up. I saw this as the easiest barrier to entry with getting involved in the trucking industry, and this would allow us to operate and learn the business better, and in the future possibly branch out on our own. With the executive summary out of the way, let's move on to the company description. In the company description, you're going to talk about who the principal members are and in what capacity they work with the company. What role are they going to play in the day-to-day business? Are you going to be incorporated as an LLC, corporation, sole proprietor, partnership? This is where you'll state how the company is going to be formed. All of those things you want to talk about in this section. You want to include any resumes with relevant information as it applies to the owners and what value they bring to the business. For our company description, I discussed that me being in finance, I deal with financial projections, business plans, startups, things like that, and I attached my resume with the relevant information. As for my brother, I spoke to his CDL process, how many years he's driven, and the experience he's gained. I also spoke to the mechanical knowledge that he has and the ability of working on the trucks in a limited capacity if he has to. In the company description section, you want to emphasize any strengths that you have that you bring to the business. If you've been driving for 15 years and you know a lot of shippers and receivers, and now you want to branch out on your own as an owner-operator, speak to the fact that you may be able to acquire those customers faster than if you hadn't had those relationships. Or let's say, for instance, that you've been working for a company that had drivers, and now you decided to go out on your own, and you may be able to incentivize those drivers to come work for your company. That's a huge step up from anyone else that's starting a company, because finding drivers is the #1 issue that they have. So if you already have a strength in the fact that you know who you can tap to potentially come into your company, speak to that strength also. But also in this section, you want to speak to any weaknesses that you have. If you're horrible at bookkeeping, make sure you're addressing it by saying you're going to hire a bookkeeper or utilize QuickBooks, something like that, for a way to overcome that weakness. Or let's say you're not that great with taxes and payroll, anything like that, so you're going to hire a company or utilize software to bridge that gap. You want to be as upfront as possible with your lender and address any weaknesses before they become an issue that he's asking you about. So you have the company description, you have your executive summary. In the next section, or market research, this is where you're going to have to do a little bit of Google searching for the particular type of companies that you're going to haul for. If you're going to be strictly hauling loads such as reefer, flatbed, dry van, then that's the information you want to put in this section. In my market research, I talked about how many owner-operators there were located in the US, what percentage of those are leased onto a large company. I talked about the fact that there's a decline in the amount of drivers, which opens up an opportunity for smaller companies to enter the market. I also spoke to the difficulties of finding drivers, the mental conditions that come along with being in a truck for that long, the fatigue, the home life, issues like that, and how it impacts the industry. Most of this information you can find by doing a quick Google search. After you have the fundamentals of the trucking industry, then you want to narrow down what type of loads you're going to be hauling. If it's going to be flatbed, talk about the existence of contracts and loads for that particular segment. For us, because we released onto Super Service, a majority of what we hauled were going to be dry vans. I talked about the need for grocery stores and the fact that in this country we are on just-in-time inventory system, so that means that more loads are moving at any given time than previously in history. Again, in this section, you'll talk about your competitive advantage, what you're going to do to set yourself apart from the competition. Being an owner-operator, you may be able to operate cheaper than some of the bigger competitors, or instead of price, you can compete on time. If you're able to be more nimble and deliver loads maybe outside of what the mega carriers can, that provides an advantage. Any way that you feel that you could have an advantage over the competition, put it in this section. After that, it brings me to, in my opinion, the most important section that you're going to write: financials. This is where you're going to talk about your sources and uses, your financial assumptions, and your projections. For sources and uses, you want to talk about how much of your loan you're going to get and what you're going to use that money for. The way the source section works, you're going to list what equipment you're going to purchase, any working capital needs that you have, any loan costs that you're expecting, and how much equity you're going to put into the deal. In our case, the total amount of money we needed was $95,000. $70,000 of it was going to be used to purchase a truck, and $25,000 of it was used for working capital. Due to the fact that the SBA requires a 10% minimum equity injection, we would have had to come to the closing table with $9,500. Here is my exact breakdown of where the sources come from. $70,000 for the truck, $25,000 for working capital, $95,000 minus $9,500 gives us a loan of $85,500. Now on to the uses. You're going to have to break out exactly what the money is going to be used for. Typically anything over $5,000 has to be broken down by serial number, title number, things like that to identify it. Now for my example, I broke down my working capital of $25,000 to these exact categories. If you look at the breakdown, the working capital uses my total $25,000. I put salaries of $5,000 for 2 months. $2,000 was required to be put into a maintenance fund. I added $1,000 for computers, phones, miscellaneous equipment, things like that. And I also accounted for 3 months of loan payments. I had legal fees, professional fees, things like that. The last 3 categories were fuel, because I knew we would have to fill the truck before my brother could run. Miscellaneous expenses would come along with any kind of business. And lastly was the loan closing costs. Some of my estimations were high, some of my estimations were low. But at the end of the day, all of the numbers added up to the exact amount that I was asking for. With a loan from the SBA, your working capital will be dumped directly into your business checking account. Any of the other loan proceeds, such as equipment purchases, will be paid directly to those dealers or vendors. So initially you have to let them know exactly what the working capital is going to be used for, but rarely do they come back and ask for proof of what you actually used it on. As long as you're using working capital to run your business, most of the time you have no issue with exactly where the money goes. So your funding request is done. Your sources and uses are done. Now you have to explain exactly how you're going to pay this loan back, which is going to be under the financial assumptions and projections. If you're going to be leased onto a carrier, talk about your rate per mile or what load rate you're expecting to get. Most of this information can be found on the internet or can be found through your actual contract when you talk to companies. With the projections, if you're leased on, that company is going to take your fuel bills directly out of your settlement checks, so they're not really going to flow onto your projections per se. You'll still have to count them as expenses because it's technically something you have to pay, but it won't come out of your net proceeds. If you're going to become an independent and run under your own authority, then you're going to have to break down those expenses and fuel and bills and all those into more detail. You're also going to have to do a little bit more research when it comes to the income that you're anticipating the truck to make. This information can be obtained from load board softwares. A lot of times they're free for a trial, and it gives you an idea. You'll be able to find out the actual rate per mile, do some calculations, multiply that by how many miles you're planning on running a year, get an average, and that'll give you your income. Now, depending on how many miles, you'll have to calculate your fuel cost, and that's going to be based on your truck's consumption, which is going to vary widely. But theoretically, you should know roughly what your truck's going to get miles per gallon. Ultimately, when you're doing your projections, you want to be very conservative on your expenses section. It's much better to have higher costs and end up with a profit than the other way around. You don't want to be surprised and end up having less money at the end of the month, year, whatever. Overestimate your cost, underestimate your income, and somewhere it should work itself out. Now, because we released onto Super Service, all of our expenses basically were listed in our contract, and we were able to put those directly right onto our business plan, which I'll post the section here. And these were exactly the costs that we were given in our contract. It was taken from our checks before we ever got the money come to us. Based on that information, we were able to calculate the net take-home pay that we should anticipate getting from the company in order to make our loan payment. So once you have the assumption section complete, the projections themselves are going to be done in a simple spreadsheet. I'm going to link one below that you can input all of your numbers, and it will basically fill out the projections over 3 years. As I've talked about in other videos, you want the number of debt service to be over 1.25 or 125% of what your debt payment is. That is what most banks set their standard. The SBA actually has a minimum threshold of 1.15 or 115%, but most banks will require you to have at least that 1.25 in order to be considered for a loan. You have all your expenses that you would list on the spreadsheet. You'd find out your income by doing a little bit of research. You take those numbers, and that will give you an overall estimation of what your business is theoretically going to make. In the equipment section, you just have to be kind of vague on what kind of equipment you're going to run. If it's going to be semi-trucks, are you going to run small vans? Are you going to run hot shots? Be specific on that. What kind of equipment you're going to buy. In our section, I said we were looking for a truck in the 3-year-old range or brand new, and talk about the reason why you're picking those specific equipment. In the manner of big trucks, if it has features that you believe will be beneficial to your company, talk to those. If it has an APU, talk about the benefits of increased fuel economy, less work on the engine, yada, 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 those things. If it has a double bunk, and someday you may want to run teams, speak to that too. You don't have to be overly complex in this section, because more than likely your lender is going to have absolutely no idea what you're talking about. You could say Peterbilt, Western Star, International Freightliner, and so on, and he may not even have an idea. In fact, saying an APU, you're probably going to have to explain exactly what that is. But basically, you just want to talk about what type of equipment you're going to use, because at the end of the day, that's what they're going to be financing. If you get a lender that has any kind of experience in the trucking industry, you may be able to get by saying you're going to buy a 20-year-old truck and run it because of the DEF system and emissions and all that stuff. But if you have a lender with no experience and you say you want to buy a 20-year-old truck and spend $80,000 on it, that's probably going to throw up some red flags. I don't know how many times I've had to work with branch managers that were financing old trucks and actually go on truck paper and show that the values actually are there. And just because the trucks are older, it doesn't mean that they're worth less. So once you completed all the other sections that we just talked through, you're going to sum up your plan with your conclusion or your closing statement. This is going to be a summation of everything else that you put in the plan. Very high level overview. Think of it as a sales pitch for your lender. It's your last ditch effort to get your loan approved. If your loan officer took the time to read your plan and got all the way to the end, this is the section that's going to push him over and get that rubber stamp of a yes. This is where you can talk about the reasons why you want to start the company, how you believe it'll be beneficial, how you'll be able to compete, and all the other things that you truly believe your business is worth. You also want to speak to where you're going with your business. In ours, we spoke to the strength of the two of us and the partnership and the fact that each one of us stays in our own lane, which makes the business able to function more efficiently. I also stated the overall goal of the company is to obtain profitability, pay down debt, and potentially grow in the future by hiring more drivers. Looking back over our business plan, I can honestly say some of the sections I was way off, especially in the financial projections and in some of the assumptions. But at the core, my conclusion stays the same. I'm working on paying down debt, becoming profitable, and expanding and hiring more drivers. Now, a lot of people ask me, how long does a business plan have to be? And my answer is always the same. It doesn't have to be War and Peace, it just has to be clear and concise. Your business plan needs to be as long as it needs to be. If you can get it done in 3 pages, but make it clear and concise that your lender knows exactly what you're talking about, go with it. If you need 10 pages, go ahead. Where it gets kind of tricky is when you get up to the 15 pages and a lot of fluff put in there. A lot of times we can see right through that and say, you're just copying and pasting it from the internet. Make it true, make it what you think it should be, and you'll be fine. I hope this breakdown explanation helps you when you're getting ready to write your business plan. Again, I'll post the links in below for all of the materials, such as the sample plan and the projections template. If you have any other questions, post them in the comments below, shoot me an email, and I can hopefully help you get through it with a little less stress. Thank you very much for taking the time to watch this video. I wish you all the best in your business, and until next time, have a great day.